Hello, and welcome to this introduction to CalSavers. I'm Katie Selensky, the Executive Director of CalSavers.
Hello, and I'm Jonathan Herrera, the Outreach Manager.
CalSavers is the state of California's new retirement savings program for private sector workers who don't have access to a retirement plan at work. In this presentation, we'll cover the basics of what CalSavers is and how it works. We'll go into extra detail for employers, but this session can be useful for both employers and employees. Our team also hosts 3 to 4 public webinars every week, some in Spanish, that are free, open to the public, and allow for plenty of live questions and answers. And you can register for those on our website, calsavers.com/events. Before I hand it to Jonathan to get into the presentation, let's start with why the state of California established CalSavers in the first place. And really the problem is that nearly half of Californians are projected to retire into economic hardship if they can retire at all. But we know that one of the main drivers of that problem is that there are millions of hardworking Californians that simply don't have access to a retirement plan at work. But the research shows that people are 15 times more likely to save if they have access to a retirement savings program at work via their paycheck. Automating savings has been proven to make a big difference. And that's really the main driver of CalSavers. It's a simple, portable way for employees to save for their futures. And we're thrilled with our early success. Already hundreds of thousands of workers are saving for their futures. And with that, I'll hand it over to Jonathan to walk us through it.
All right, thank you very much, Katie, for that introduction. And that's really it. The state was trying to find a way to make sure that more workers in the state of California had access to a workplace-based savings vehicle. So back in 2016, the legislature passed Senate Bill 1234, which did 2 things. It created a new mandate on employers, which we're going to talk about in some detail over the next couple of slides, and it authorized the creation of the CalSavers program. So the new mandate says that any business in the state of California that does not offer an employer-sponsored retirement plan and has at least 5 employees is going to need to register for CalSavers and facilitate their employees' access to our program. When we're talking about your employees, we're looking at your your employees with California W-2 wages. And in order for them to be eligible, they do, again, need to have California W-2 wages. They need to be 18 years or older, and they do need to have a Social Security or an ITIN. It's always important for us to note at the very beginning that we do not see CalSavers as intended to replace or compete with employer-sponsored plans. As we mentioned, the goal of this legislation is to increase access to workplace-based savings vehicles throughout the state. So, if we see more private sector plans popping up, that's a win for employees and that's a win for workers throughout the state. We launched the program back in July of 2019, and when we did that, it sort of kicked off a 3-year phased rollout of the registration deadlines based on the size of your business. The first deadline actually passed already, September 30th, 2020. Businesses with more than 100 employees should have registered. If we have any folks listening who might be in that category, please connect with us. We'd like to get you going as soon as possible. The next deadline is going to be June 30th of 2021. And that's for businesses with more than 50 employees. And then the last deadline is for businesses with 5 or more employees. They'll have until June 30th of 2022. But it's important to note that when we opened the program statewide on July 1st of 2019, we opened it for all eligible businesses. So you don't have to wait for your registration deadline if you'd like to get in advance and help your employees start saving for retirement. We're ready to help you get started. In case we have any folks listening in who have less than 5 employees, do keep in mind that we measure your number of employees by looking at the average number of W-2 employees that you report to EDD for the previous calendar year. But if any of you have an average of less than 5 employees, so 4 or fewer, you are not subject to the mandate. You can't register for the program, but we did open the program for individual participation. So your employees or you yourself, if you happen to be self-employed, a contractor, gig worker, you can actually go to calsavers.com anytime and set up your own account and start saving on your own from your bank account whenever you're ready. On our website, we do have a list of the qualified retirement plans that you can have instead of CalSavers. So if you have any one of these, you are exempt from the mandate. You can check out the list on our website, calsavers.com, under the frequently asked questions. But this is live for you, so feel free to check it out if you are curious about that. And then there are a couple of things that I want to cover quickly before we get into how the program is designed and how it works. Just a few things that I think are primary features of the program. Number one is that it does feature automatic enrollment for your employees. So it is completely voluntary for them because they can opt out or opt back in at any time. But it is designed in such a way that, if they don't opt out within the first 30 days of their employer registering and giving us their list of employees, which we'll talk about in just a second, they do get automatically enrolled at the default settings. And we'll talk about those in a little bit too. The second thing that I think is really important is that the program is designed as a public-private partnership. You should know that the program is professionally managed and advised by financial service companies with oversight from a transparent public board chaired by the state treasurer. So you get the expertise of these firms, but with state oversight. And then the third thing that we're very proud of is that we are creating and operating this program at zero cost to the state and the taxpayer and the employer. There are no fees for employers, and the program, once it's up and running, is going to be self-sustaining based on the very small fee that we charge the savers. And we'll talk about that in a little bit more detail when we get to the saver features. So with that introduction out of the way, let's talk a little bit about what facilitating CalSavers means for you as the employer. When the legislation first passed back in 2016, one of the first things that we did was create a group of stakeholders, both on the consumer side and on the employer side. And what we wanted to know from employers and employer representatives was, what is it about programs on the existing market that make it difficult for employers to offer an employer-sponsored plan to their employees? And over again, employers that don't offer a plan report sort of these three hurdles. Number one is the administrative burden. Number two is the fees. And number three is the fiduciary liability. So we tried to create CalSavers to address all three of those issues. We've tried to make it as easy as possible to facilitate. Hopefully you'll see some evidence of that over the next couple of slides. There are no fees for employers to facilitate the program. And because employers are not sponsors of this program, they do not have the fiduciary liability. That responsibility falls on the board, our small staff, and all of our relevant contractors and advisors. So let's talk about those employer responsibilities. And really, it starts off with two things. Number one, you register by your state required deadline, and you take a few minutes to set up your account. Most employers report that this step takes less than 15 minutes, but it's just a matter of going to our website, calsavers.com, setting up a username and password, and telling us a little bit about how you do your payroll, so that we can, help you get that going. The next thing employers need to do is submit a roster of their eligible employees. And again, that's all of your employees with California W-2 wages that are 18 years or older and have a social security number or an ITIN. And then the last step is sort of for employers to submit contributions for participating employees as part of your existing payroll process. And those are really the two ongoing sort of duties of facilitating employers. And that is to maintain that roster of employees. So when you add employees to your company, when you hire them, you'll add them to your roster of employees that you keep on calsavers.com. And then you'll continue to submit those employee contributions for your participating employees as part of your existing payroll process. And we've worked with all types of payroll setups. And by and large, we've seen that the CalSavers process fits in pretty seamlessly with an employer's existing payroll process. Let's talk a little bit about things that employers will not experience. Again, employers will not incur any program fees. Employers don't have any fiduciary responsibility, and employers are not allowed to make an employer contribution. So that means no match, for example. The only contributions that are going to be made into this program are your employees' own contributions, either from their payroll or if they choose to make contributions on their own from their bank account. There are a few things that employers must not do. Employers should not encourage or discourage participation in CalSavers. Employers should not provide advice about investment options, taxes, or participation in the program. Employers don't manage investment options, process distributions, or manage any of the changes that employees make. For example, changing their address, changing their beneficiary, changing their contribution rate. And we did that on purpose to alleviate that responsibility from employers. Again, our goal was to make this as easy as possible for employers. So all of those interactions are done between the employee and the program. And then CalSavers will notify employers of any relevant changes, such as, changes that might affect the payroll. But we'll make sure that you're aware of those before you have to run your next payroll. So let's talk a little bit about the employer timeline, what the process looks like. It all starts with receiving your access code from CalSavers. We've done our best to identify eligible employers throughout the state, and we have reached out to you by both email and US mail to send you your access code. If for some reason you don't have it, please reach out to us and we're more than happy to get you your access code. But once you have that, you can register anytime before your state required deadline. Just a couple of things you'll need to register: your federal EIN and your California and that CalSavers access code. Once you set up your account, you'll have 30 days, once you register, you'll have 30 days to set up your account and upload your employee roster. And this is sort of important to take a moment to talk about. Again, you can sign up, you can register for CalSavers anytime before your state required deadline. But once you do, you are required to begin facilitating the program. So you'll have 30 days to set up your account and upload your employee roster. And when you upload that employee roster, that kicks off a 30-day employee decision period. We'll talk a little bit more detail about this in just a second, but this is sort of a 30-day waiting period where your employees get the opportunity to decide if they want to participate or if they want to opt out. But this provides employers with a good opportunity to start getting their payroll set up so that it's ready to go at the next step, which is sending those payroll contributions for the employees that are enrolled in the program. So after that 30-day employee decision period, we enroll the employees into the program, and employers can begin initiating payroll deductions and remitting those contributions to the program, to CalSavers. And that's it. That's the employer responsibility for facilitating CalSavers. Now, let's talk a little bit about what your employees get and what the program means for your employees. It is all built around an automatic payroll deduction individual retirement account, an IRA. And what that means is contributions are deducted directly from your employees' paychecks and deposited into an IRA account that is in their name and they own at all times. Again, the program is completely voluntary for savers. It does feature automatic enrollment, but savers can opt out or opt back in at any time. And just like our goal was to create an easy program for employers to navigate, our goal was the same for employees. And that starts off with that automatic enrollment and our default setting. So folks can get automatically enrolled, set it and forget it, and be on a path towards retirement security. Or if they do want to customize their settings or learn more about the program, they can come to our website, customize their account, choose their investment options from our small menu of investment options, and make other choices that might make their participation easier for them. The accounts are completely portable. This is another great feature of CalSavers. A traditional employer-sponsored plan is typically tied to the employer. So if your employee leaves, they're often faced with the decision of either cashing it out, which is what most people do, or rolling it over into another program. But with CalSavers, again, the IRAs belong to the employee and follow them wherever they go. Chances are, after these deadlines roll out, they might end up at another CalSavers participating employer, in which case they can continue to make contributions into their existing CalSavers account. If they happen to end up somewhere where they're not sponsoring, or I'm sorry, facilitating CalSavers, then they can keep their CalSavers account and let it grow on the side. They can continue to make contributions on their own if they want to, or they can roll that money out of CalSavers into another qualifying option. And then, of course, as I mentioned, there are no fees for employers. The program is self-sustaining based on the small fee that we charge the savers. So savers do pay a very small fee to cover the program and administration, and investment costs. The legislation that created CalSavers said that we had to have our fees below 1% by year 6 of the program. We're proud to say that we launched the program with fees below 1%. Right now, depending on the investment option that a saver chooses, they'll pay anywhere between 0.83% and 0.95% per year. So in real dollars, that's between 83 cents and 95 cents for every $100 they have in their account per year. And then we also, as the program, grows and reaches scale, those fees will automatically go down, keeping the fees even lower for participants as the program grows. So let's look again at the timeline for participation in the program, but this time from the Savers perspective. So again, the Savers experience with CalSavers begins when the employer uploads that roster of eligible employees into the CalSavers employer portal. When that happens, CalSavers will begin to send notifications to the employees to let them know that the program is here. We encourage them to come to our website to customize their settings, but very importantly, we let them know that they then have 30 days to opt out if they don't want to participate. After those 30 days, they are enrolled into the program and employers can begin initiating those payroll contributions. But during those 30 days, that employee decision period that we talked about earlier, employees really have three options. They can do nothing, in which case, again, they'll get automatically enrolled at the standard settings. We'll talk about those in just a second. They can come to our website and customize their account, or they can opt out. That's the third option. And we even tried to make that as easy as possible. They can call us over the phone to opt out. They can do it online, or they can submit, sign and mail in a form if that's easier for them. Let's talk a little bit more about those standard options and the ways that folks can customize their experience with CalSavers. Our default account type is a Roth IRA. So for those of you who are less familiar with the different types of IRAs, the Roth contributions are made after tax. The benefit of that is that all of the growth that the account experiences over the saver's career can be withdrawn once they reach retirement age without paying taxes on the fund. So tax-free growth is a pretty compelling feature. The other reason why we thought it was important is that because the contributions are going in after taxes are already paid, it actually allows the savers to withdraw their contributions before they reach retirement age without paying taxes or penalties on it. And we thought that that was really important, and that some savers might feel more comfortable participating in a program if they knew they had access to the funds in an emergency. For the contribution rate, we start off with a default contribution rate of 5% with automatic escalation. And what that means is that every year, we're going to raise the contribution rate by 1% until it reaches 8%. The idea behind that is to get them started at a rate that's relatively comfortable, but then, nudge them to do a little bit more, a little bit, stronger savings, as they progress and get more comfortable saving with the program. And then for default investment options, for the first 30 days that a person participates in CalSavers, their contributions will go into our CalSavers money market fund. After 30 days, the money that's in those funds will get transferred over to a target retirement fund, and all of the subsequent contributions will go into the target retirement fund. So let's talk a little bit about how savers can customize those options. Well, of course, the Roth IRA is not necessarily for everybody. There are some folks who want to be able to take a tax deduction for the current year, and there are some folks who, really high income earners who might not qualify for a Roth because Roth IRAs do have income limits. So those folks in those situations can recharacterize their contributions to traditional contributions, which means that number one, they could, if they qualify, take a tax deduction for the current year. But it also helps them avoid those income limits if they do happen to be a high income earner. Customization for the contribution rates. Obviously, savers have complete control over how much they contribute to the program. So they can actually choose anywhere between 1% and 100% of their salary, as long as they stay below the IRS limits, which this year, 2021, are at $6,000 per individual per year, unless you are over 50, in which case you qualify for catch-up contributions and you can do $7,000 per year. And then, of course, savers can turn on and off that automatic escalation feature. We do notify savers that, when that automatic escalation is going to kick in at the beginning of the year. And they, of course, have the ability to pause that or turn it off if they're not ready to allow their contributions to escalate. And then for investment options, as I mentioned earlier, we wanted to keep it simple and not overwhelm people with too many choices. But at the same time, we wanted to make sure that people, were able to invest with CalSavers in a way that they felt comfortable. So in addition to the Target Retirement Fund and the Money Market Fund that I mentioned earlier, we also have a Sustainable Balance Fund, also called ESG, that's Environmental, Social, and Governance. And then we have a Core Bond Fund, a Global Equity Fund. So, we wanted to make sure that we had options on either end of the more conservative and more aggressive options so that savers could find something that feels comfortable for them. Obviously, in a state as diverse and as big as California, we wanted to make sure that both employers and employees had the resources and the assistance they need to get this program going. What it comes down to is no employer and no saver is in this alone. We want them to know that they have our support in this journey. And that all starts with the website, calsavers.com. Tons of resources available for both savers and employees, program details, forms, frequently asked questions, tips and templates for employers, stuff like that. Of course, not everybody wants to interact with the website. Sometimes you just want to pick up the phone and be able to talk to a real human being. We have dedicated customer service lines for both employers and savers with a phenomenal customer service team that answers the phone very quickly. You could also email us at calsavers.com, but our phone is available 8 a.m. to 8 p.m. Native speakers, English and Spanish, available most of the time, and also access to a language line so we can work with savers and employers in whatever language they feel comfortable. We're also very proud to offer one-on-one support for all employers and savers. So we've got a dedicated onboarding team whose job it is to reach out to employers after they register and help them get on a path towards compliance and get everything set up. In addition to that, we've got a team of in-state representatives. It's our CalSavers field team available to assist employers and savers throughout the state. They can help employers with the registration, the account setup. They can assist savers with enrollment, answer questions about the program. We do webinars and meetings for savers to learn about the program. Obviously, in COVID times, our ability to visit employers in person is limited right now. We're looking forward to getting back on the road, but our team is very well equipped to be able to handle meetings and presentations online, similar to this one. To get connected with someone on our field team, please feel free to email fieldsupport@calsavers.com, and we will get you in touch with your local field team representative. I already mentioned the multilingual support available on the phone, but you should know that multilingual support is available through all three of these channels. The website's available in 10 languages right now. We're hoping to expand that to even more soon. And then our field team can do presentations and meetings in English, Spanish, Cantonese, and Mandarin. So please take us up on that, and we'd be happy to connect with you when you need assistance. We also have the CalSavers mobile app, bilingual. We know that not every saver might have easy access to a computer at work or at home, but a lot of folks have mobile phones these days. So we wanted to make sure that people could access their account on the go. So App Store, check it out. Couple of things to remember as we sort of bring this webinar to a close. Employers should know there are no employer fees or employer fiduciary liability. Employers play a limited role. Facilitating is easy and takes minimal time. Employers do need to register by their state required deadline. Savers are automatically enrolled in the program, but participation is completely voluntary for them. And we have flexible choices available for savers to decide how they want to interact with the program in a way that makes them feel comfortable. And then most importantly, we're excited about the benefit, those millions of Californians who will have an opportunity to save and be on a track towards a secure and dignified retirement. So please register today. I will put the resources and client services back on, so feel free to take a screenshot. I'll try to put my smile on so that you get that when you take your screenshot. But again, no employer or saver is meant to do this alone, so please reach out to us. We're looking forward to connect with folks throughout the state and get them going on this program. As Katie mentioned, we are offering multiple webinars per week in English and in Spanish. You can join our how-to series on Fridays, where we focus on one aspect of the program, either uploading your employees or submitting your contributions. So when you get to that point in the process, feel free to join us. But our standard webinars, which we do at least 2 times a week, are very similar to this one, but we actually walk you through a few screens so that you can see what facilitating the program actually looks like. And then we have live question and answer. So if this presentation inspires some questions, please feel free to join us for one of those, and we'd be happy to answer your questions live. Or again, connect with us by phone or email. We're again more than happy to connect with folks. No employer should do this alone. And we are ready and able to help you through this process. So thank you very much for spending some time with us today. I hope you found this information useful, but again, please feel free to reach out to us anytime and let us know how we can be of assistance. So thanks again very much, and have a great day.